Welcome back. Today's episode, I'm answering the question, what are tax deed sales? Okay, so what's going on here? Well, the statutes of the state in all 50 states are going to say that the legislature makes the rules, and those legislatures will sit in the Capitol, they make rules, and they say everyone must pay property taxes. So if you don't pay property taxes, there's going to be a consequence. The consequence is very simple. The county is going to confiscate the property, and then they're going to resell it. They use a tax deed to do that. All right, so what we're talking about today are what are tax deed sales? Well, I'm going to tell you they're an auction, and sometimes they're even on the courthouse step. But the legislature authorizes the Board of Supervisors or the county commissioners to sell those properties at auction, then take the revenue from that auction and pay the back taxes. Now, why do they let them do that? Well, if the treasurer can't collect the money, then they're going to have to confiscate it and resell the property. They're going to use that money to pay the county's bills. So property taxes pay for the schools, the school teachers, they pay the fire department, they're going to pay the police department. You're getting the idea. All the county employees are going to be paid from the property taxes. So they have to collect property taxes. All right, the highest bidder at the auction is going to pay the county. The county's going to use the revenue to pay the county's bill. So I don't know why you're watching this video, but most people that are watching it, maybe they want to be an entrepreneur. So entrepreneurs come in all sizes and shapes, but most of them, they have the same motivation. What is that? They want to make a lot of money, or they want to be recognized and be famous. I don't know which one you want, but you can probably do both of those by buying enough of these tax defaulted property. So where do entrepreneurs come from? Well, they're mostly people that want to be self-employed. They maybe don't fit into a corporation. They don't fit into the mold or the template, so they want to do what they want to do when they want to do it. They don't want to work on someone else's timetable. So if you're one of those people, you're going to find this business is absolutely perfect. So what am I covering today? I'm answering the question, what are tax deed sales? That really means, what are these properties? These are tax defaulted properties. They're going to be sold at auction. Okay, now if you're an entrepreneur, you're probably used to working whatever hours, okay? If you're not an entrepreneur, you get a nice job, you work 40 hours a week. I know many people that quit a 40-hour-a-week job, but they go home and they have to work 60 hours to make the same amount of money, but guess what? They get to make their own decision. So if that's you, this business is going to fit perfect. All right, so what happens at these auctions? Well, I'll give you a good example. $100,000 property at auction, they're going to start the auction at the back taxes. I don't know what it'll sell for, but let's say it's sold for $7,500. Well, if it's sold for $7,500 in overdue taxes, well, guess what? The property is actually going to sell for that. It doesn't matter what the property had a value, because the county is only trying to get the most money they can at the auction. So they could have discounted the property all the way down 60, 70, 80% down to just the taxes owed. Whatever happens at the auction, the highest bidder is going to get it. All right, when they get it, they're going to get a deed to the property. So it doesn't matter where they got the deed, it's going to say that they now own the property. The county is going to transfer the property to them without a mortgage and without a deed of trust. Anybody can attend these auctions. So I've seen people go to auctions where the value was $100,000 and someone bid up to $25,000 and got the property. They're going to get the property without a deed of trust and without a mortgage, and the county is perfectly happy with that, because they're trying to get rid of these properties, get them off the tax roll, and get the properties back on the honorable tax roll. In other words, those are people that are going to pay the taxes. They want people who are going to pay the taxes. All right, so the tax deed transfers the property from the county to the individual. Then the individual has to take advantage of the low price and try to find a way to sell it. So don't buy properties that you don't already know what you're going to sell them for. All right, now all the revenue that's generated to the county, in other words, when someone buys it at the auction, is used to pay the county's bills. What you do with the property is up to you. So if you bought it low and then you want to sell it at whatever price you can, all right, if there's enough margin, you're going to make a profit. If you don't have enough margin, you're not going to make a profit. All right, so we've talked about how the bills get paid. The bills always get paid at the county because the county is auctioning off the property. What happens to those encumbrances? Don't worry about that, because the county is going to wipe them out. You don't have to worry about paying a mortgage again or the trust deeds. Different sales have different values. It's important for the investor to understand it's up to you to determine the condition of the property. When the county transfers the property to you, they're going to transfer it using a quitclaim deed. That simply means they quitclaim any responsibility. They're not responsible for the condition. They're not responsible for any defect in the title. So why are you watching a video like this? Probably because you want more freedom in your life. Well, you'll certainly get that if you learn how to do this business, because you work when you want and you can work on what you want to work on. These auctions are taking place in all 3,000 plus counties. They're going to take place annually. Some counties will have 2 or 3 auctions. The large population counties will have hundreds of properties. The small population counties will only have dozens or maybe up to 100 of those properties. Okay, so if you like working your own hours, you like working when you want to work, this is going to be a perfect business for you. All right, is it going to be hard to do? No, but there's going to be a working process that you have to learn. What about property redemptions? Okay, well, some auctions will have a redeemable deed which they'll sell. When they sell the redeemable deed, that means that you purchased a deed to the property. However, the previous owner, they can redeem the property up to 1 year. All right, in Texas, it's up to 6 months. All right, when they want to redeem the property, they have to come in and pay whatever you paid, and they have to pay a penalty. So let's use Texas as our example. The example in Texas is that they have to come in and pay whatever you paid at the auction plus a 25% penalty. All right, let's go to another penalty state, and that would be Georgia. In Georgia, what they do, same thing. They sell the property, but it's a redeemable deed. So you bought at auction a redeemable deed. What happens if people come in, they want to redeem it, they have to pay whatever you paid plus a 20% penalty in the first year, or if they wait till the second year, they have to give you a 30% penalty. So you're getting the idea. So that's a redeemable state deed. All right, now I'm going to run out of time. These tax defaulted auctions are in all 3,000 counties. I'm not an attorney teaching you how to do this. I'm a practitioner. I've been involved in the tax lien and deed business for over 30 years. You can do the same thing. I have 2 cautions, and both of them have to do with when you go to the auctions. Number 1, you want to make sure you've looked at the property before you bid on it so that you know what the condition is. I don't know if there was a hurricane, could have been a flood, could have been a fire. Who knows if it's next to a chicken farm? It's not going to smell very good in July and August. All right. The other big concern is figure out your exit strategy when you're looking at that property. Don't keep bidding up just to get the property. You want to make sure you get the property at the lowest price possible so that you have as much margin so that you can sell it and have a good exit strategy. My name is Ted Thomas. I'll see you on the next video.